Today, our stock analysis will focus on the Chinese conglomerate Alibaba Group, ticker BABA. Since this is a Chinese based business, if buying into the company, you're actually buying American Depository Receipts, otherwise known as ADRs. So you should understand the risks of owning ADRs of a foreign company before investing in it. Now, let's take a quick minute and look at the financials. Starting off with revenue, although 2023 was a down year, the company did recover in 2024, and since 2015, revenue has grown more than 950%. Then net income and earnings per share, not growing as much as revenue, but each of them up roughly 180% over the past 10 years. Then for dividends, Alibaba just started paying a dividend last year, and we should expect this to continue moving forward. For share count, we could see it was increasing up until 2021, but since then on a decline and getting close to the outstanding share amount that it was at back in 2015. Then free cash flow, though 2022 and 2023 were down from their prior year, but still Alibaba brings in a significant amount of cash and more than 10 billion every year since 2017, and 4 of the last 5 years being more than $20 billion. One last thing to point out, their profit margins have been cut by more than half over the past 3 years. And not shown here is gross profit margins, which have also been on a downward trend. So something to keep in mind. But let's jump down now and perform a stock valuation next. Here's a valuation setup, and we will look at a few scenarios. But first, I want to point out that we are using a healthy margin of safety of 70%. And this is for a few reasons. We saw during their financials that their margins have been going down over the past several years. Also, China can always impose new regulations or tougher regulations on businesses that can significantly impact, like Alibaba's financials. And also, there's always that China concern about invading Taiwan. But with that, let's look up here in the top right, the net income and earnings per share CAGR over the last 10 years. We can see just over 12%. But for this first scenario, I am being a little more conservative, and we're going to use a short-term growth rate of 8% over the next 10 years for the 10% discount rate, and we are using a 3% long-term growth rate. Now, with that, we do get an intrinsic value of $139.10, and with that 70% margin of safety, brings it down to $97.37. Now, this is above where it's currently trading at around $76. So this does look like an opportunity. And you also have big investors like Michael Burry, who's taken a big position in Alibaba. But let's increase the short-term growth rate. Maybe not go up to that 12%, but let's just increase it to 10% and see how that raises the valuation. With a 10% short-term growth rate, the intrinsic value jumps up to $163.11, and with that 70% margin of safety, brings it down to $114.18. Now, we can increase that short-term growth rate to 12%, but obviously he's going to increase the valuation even more, probably get the intrinsic value up to around $200. But let's look at the other side of the coin. We'll just be a little more conservative than we were in the first scenario. We're going to lower it down to 6% and see how that impacts the valuation. With a 6% short-term growth rate, intrinsic value is lowered to $118.75, and with that 70% margin of safety, brings it down to $83.13. So again, the stock price is trading below this at about $76. So again, definitely looking at that opportunity, even with a conservative growth rate here of 6%. But for me, it's not something where I really want to invest in China. There's still too many concerns and unknowns. Even taking the 70% margin of safety, I still think there's too much of a risk. But let's look at a few other data points before we move on. And the first is the PE ratio. See, 17.6. So not too bad. Still kind of in that value opportunity range on the PE basis. Long-term debt to free cash flow, I like seeing under 3. You can see they're well below that, even below 1. So good sign there. They only just started paying dividends, so no dividend growth just yet, but should expect that dividend to grow over time. But the current dividend giving a yield of 2.6%, so not too bad there. And then share count, we did see on the financials, this was increasing up until 2021, but over the past several years, this has been on the decline, and since 10 years ago, it's only up just below 2%, so not too bad, and hopefully they continue this trend of buying back their shares. And then net profit margin over the past 10 years, very nice. See, just over 25%. But again, in their financials over the past 3 years, significantly cut from what it was previously, and now just about 8%. Now, I still like seeing 10% higher. 8% is not too bad, but still concerned with the declining trend in their margins. One last thing I always like to look at, return on invested capital. Again, I like seeing 10% or higher. We can see they achieved that about 10 years ago. But again, kind of on a declining trend, 5 years, just above eight. 3 years and 1 year around five or just over 5%. So again, a little bit of a concern here if it's going to start a declining trend, just like their profit margins. Now, let's move on and we'll look at my portfolio's performance next. Here's portfolio's overall performance, and we'll look at a few of the investments. First, NVIDIA. The stock has been on a tremendous run recently, and I increased my position the other day, and I feel this stock has about another 2 years to run. Now, I was able to increase my NVIDIA position by trimming my PayPal position in about half, as PayPal has just been a value trap for me. And depending on how their next earnings results go, I might sell out of this one completely. Next, Palantir, another stock that has had a great run recently. Now, their next set of earnings needs to live up to expectations. Last one I'll point out is Build as First Source, BLDR. Now, this position has not been a good performer since buying into it a few months ago, but I still have a positive outlook. And since I am bullish on the residential construction market, I feel this will turn around. I just need to give it a little more time. I hope you did enjoy this video, got some useful information. Hope to see you next time. Thanks for watching.